Hey friends, and welcome back to the Finance Cowboy Show. You've been wanting to buy your first or maybe your next real estate deal and you just are stuck. Good news for you is I'm going to walk you through exactly how to break through that with my 9-step process of what you need to do to get that next deal done. Many of you have heard my story. If you haven't, my wife and I have been able to buy a lot of real estate, which has led to a lot of wealth and financial and time freedom over the last 6-7 years, all while I was working a full-time job, all while we were raising a family. We got 4 crazy kids. We're involved in our church. She sings and plays the guitar. I play the drums. We've been over the young adults ministry. I coach my kids' sports team. Like, we're just the everyday person who lives in rural, small town South Carolina, and has built, untraditional wealth through real estate. And we weren't given anything. We've been given no inheritance. Nobody's given us a dime. Everything that we've done has been based off of the hard work that we both did together over the years to get to where we are today. And there's obviously a lot of sacrifice to getting there. It's a whole different video, a whole different topic of all the delayed gratification and the hard things you have to go through. But I can tell you, we're on the other side and we're only 32 years old. We're gonna be 33 this year, and it's totally worth it because we were in a really, really good spot compared to where we started with 6 figures worth of debt back in 2014. And so I say all that to say, throughout this entire journey, I have developed what I now call the W2 Millionaire Method, which is just the method that we use to buy real estate, all while working a full-time job. I think there's this myth that you have to get into real estate full-time, you have to quit your job, you have to go all in and be a wholesaler and be an agent and all this stuff to get into real estate, and that's just not true. I'm living proof that you can continue to work your full-time job while building wealth on the side through real estate. And I actually think that is the way that you should do it, because your job works as that safety net, and then it also makes you very loanable, which is huge in the real estate space. The point is the framework that we walk you through to get you from point A, which is I don't know how to buy my next property, to point B, which is I've just closed on a property, where's my next one? And so that's what we want to talk through today. And I want to talk you through the 9 steps of the W2 Millionaire Method to get you from point A to point B so that you can start growing your portfolio and changing your life. So let's start with number 1 is we have to choose our strategy. I run into so many folks who have what I call spaghetti brain. They hear all these different strategies that people are using, whether it be Airbnb, multifamily, mobile home parks, single family, duplexes, house hacking, you name it. There's all different types of stuff. And so you hear all these different strategies and your brain gets all jumbled up. You get the spaghetti brain and you're just not sure which way to go because there's so many different ways that you freeze. So I'm going to help you on this show choose a strategy. You can make money in all different types of real estate. So at some point we just have to choose. And so I'm going to give you the one that's worked for me. I know it works. It's made us wealthy over the years, and it can work for you too. So what is that? Well, I want you to focus on single family homes. Let's move everything else out of the way. And we're going to focus in on single family homes. And more specifically, we're going to focus on distressed single family homes. So when I say distress, I'm just talking about ugly homes that need some work. Or maybe the homes aren't even in that bad of a shape, but the owner is distressed. They need to get rid of the property for some reason. And we're going to look for these homes in B and C class neighborhoods, all right? So not A class would be the best part of town. D class would be the worst part of town. We want somewhere in the middle of that. So we're looking for single family distressed homes or sellers in B to C class areas, all right? So that's step 1. But then let's take it a step further. So we know we were doing that. Don't think about anything else. We're not doing mobile homes. We're not doing short-term rentals. We're doing long-term rentals, or we're doing flips with single family homes in those particular areas. And so now we have to choose, do we want this next property? Don't think about anything else but this next property. Do you want it to be a rental or do you want it to be a flip? Here's how you decide. Do you have plenty of income coming in where you're saying, Jaron, I don't need any more cash right now in my pocket? If you don't need any more capital in your pocket, you got a lot of income coming in elsewhere, then I would say that this next property that you're going to buy needs to be a rental. Because when we look at what's the difference between a rental and what's the difference between a flip, when we look at rentals, they're going to build wealth over time. Okay, so you're not going to make that much money from them from the get-go. I don't care what anybody says, even with cash flow. Some types of properties will give you more cash flow than others, but your real lever is going to come from you buying this rental property. And then tenants are going to pay down your debt for you while it goes up in value over time, and you're getting tax benefits all along. Okay, that is where wealth comes from. That's what changed mine and my wife's life over the 5-year span of buying tons of rentals. We went from 0 to 22 in a year and a half, and then we kept scaling 25, 30, 35, 40, and that's where our life started to change, because you had all these rentals that were just lined up building me immense wealth. And then you can access that equity over time. Your cash flow gets better over time. A lot of things that happen as you own them over time. But then you may say, okay, I need cash right now though, Jaron. Like, I don't have a ton of capital, or I need cash to do this or that. That's fine. We can still go through the same process, look for the same type of properties, but instead of keeping it as a rental, you're going to just sell that property after you fix it up. Okay, so you guys choose right now. Do you need cash? Great. You're going to flip. You don't need cash? Great. We're going to keep it as a rental, and we're going to build wealth. All right, that's step one. Now, what we do next doesn't matter whether we're flipping or whether we're keeping it as a rental. All these things are going to go the same until we get to the end. So what's the first thing we're going to do after we've chosen our strategy is we're going to select a market. Does where you live lend itself to the strategy that you're trying to choose? If you live in LA, New York, Austin, Texas, you name it, these big cities, then if you're trying to buy rental properties, you're probably not going to be able to find a ton of good deals, especially if you're trying to burr, okay? So if we're looking at buying rentals that are at least going to break even or cash flow for us, oftentimes, not all the time, oftentimes some of the best areas are the Midwest and the Southeast. Now you may say, well, I don't live in the Midwest or Southeast. Okay, that's fine. I would say about 70% of real estate investors invest out of state or out of town. It is a very common practice in the real estate investing world. And so what you'll need to do is break into these markets, which we'll talk about here in a minute, so that you can invest elsewhere and you don't have to invest where you live. Now, I will say, if you live in an area that's a little more expensive, doesn't lend itself as a rental spot, it may make sense as a place to do flips, because a lot of times these more expensive markets, although rentals don't work, you can flip there. You have to pay a little more to get into the game. For example, where I may live, to buy a flip, we may pay $125,000, put $100,000 into it, and sell it for $300,000. In a more expensive market, you may be buying it for $300,000 or $400,000, putting $250,000 in it, and then selling it for $8, $9, $1 million. It's all a numbers game. It's just bigger numbers. Okay. And so there's going to be different opportunities in different markets. So that's why it's going to be important to know, what are we trying to accomplish, so then we can choose those particular markets. And the way we choose those markets is by making connections with others. Who do you know, if you have to go elsewhere, who do you know who lives in a part of the country that may lend itself to whatever you're trying to accomplish? We're going to jump on the Facebook groups. We're going to network locally to see who else is investing out of state and who else knows people that are investing out of state. We're going to join local RIAs, Real Estate Investment Association groups. You're going to find other investors in these different markets. Hop on forums. Or if you come into our world and we coach you, we've got markets that we've built out for folks. However you go about it, we nail down where we're going to buy, and then we move on to the next step, number 3, which is building a team. So we've chosen where we want to buy, and now we've got to build our team out. When I look at our team, I look at the core 4. We've got agent, contractor, lender, property manager. Agent, contractor, lender, property manager. Those are the core 4 people that are going to help you in these markets. Now, I will tell you, we want to find an investor-friendly agent. You just don't want any old agent. You want an investor-friendly agent, which is just an agent who works with investors. And I would encourage you to find an agent who has properties themselves, because they're going to understand the game. Okay, then we want to move on to our contractor. Obviously, if we're buying distressed properties, we're going to have somebody who's going to fix it up. So we get a contractor in place. We find this contractor through networking. That's why it's important to start with the agent, because we're going to have the agent who's going to have his contractor contacts. Then we've got the property manager who's got tons of contractor contacts and who may even actually fix your property up for you after you purchase it for a fee. And then as we inundate ourselves in that market, talking to other investors, finding out who they're using and the crews they're using as well is going to be huge for finding those contractors, because the best way to find a good contractor is off a referral from people who are already using them. It's no secret that if you're going to be successful in real estate investing, you have to be able to fund your deals, whether you're doing the BRRRR method or whether you're fixing and flipping properties for a profit. You got to be able to get to the closing table with money, and you got to have money to rehab the property. And so I personally use backflip capital when I need money to get to the closing table and to rehab my properties. I'm in the middle of a flip right now, and I partner with Backflip. It has been the smoothest process of all time. I literally went on their app, applied for the loan. You get pre-approved in less than 48 hours. You can lock in funding in just a few seconds with the touch of a button. Funding takes less than 2 weeks. Hello, that gives you an advantage when you're making offers on properties. And I can't say enough about partnering with Backflip Capital. They're great folks with a fantastic product that everybody listening to this should check out for the next time you go to do a BRRRR deal or fix and flip property. So here's what I want you to do. Go down to the show notes of this show. I've put a link for Backflip Capital in those notes. All you have to do is click the link so that you can download their app and get your next deal funded with Backflip. Then we're going to find our lenders. If you're burring or flipping, you may have a hard money or private money lender on the front end who loans you to purchase and rehab the property. And then if we're going to keep properties as rentals on the back end, then we need to have those relationships with small local banks and those DSCR lenders that can help us refi into long-term stable loans as we hold properties over time. And then the property managers. If you're going to keep properties in your portfolio, whether you're keeping them locally or far away, there's no better person to have on your team, in my opinion, than a good property manager, especially one who does full service. They're going to do all the background check. They're going to do all the screening. They're going to place the tenants. They're going to collect. They're going to do all the repairs. And then, like I mentioned earlier, there are a lot of property management companies out there who, if you buy a property and you're going to keep it as a rental and they're going to manage it, and it needs to be rehab before even having a tenant in place, they will manage the rehab, bring crews out so that you don't even have to think about finding contractors or managing that, because your property management company is doing it for you. They know what needs to be done to the property to get it fixed up, to get the top rent without spending too much money. That's what mine does, is they spend just enough money to get it where it needs to be in great quality living condition, but not more than what the market allows for. Then they get top dollar rent. So we're going to start again with the agent, contractor, property manager, and lenders. Once we've got our team built out, we're going to move to generating leads. Listen, the most important part of the real estate journey is generating leads. If you do not have leads coming your way, then you can't buy deals. We live by the 1-1-1 rule. You analyze one deal per day, make one offer per week, then that's going to lead to about one deal per quarter. Now, if you want more than one deal per quarter, then we're just going to up those numbers. To be able to up those numbers, we need to have leads coming in. So depending on how many deals you're trying to do per year, it's going to depend on how many leads you need to generate. And so we can generate leads essentially two different ways: organic and paid. Organic is we're going to have our agent bring us deals. We're going to have wholesalers bring us deals. We're going to have property managers bring us deals. We're going to have other investors bring us deals. We're going to look on Zillow. We're going to look on Facebook groups, different forums, all the free ways to get leads and to find deals. That's what we call the organic side, which if you are not doing a ton of deals per year, it's a fantastic way to buy deals. I've bought so many deals off Zillow's. I've bought so many deals off agents bringing them to me, and I bought so many deals off of other investors and property manager bring me deals. And so you can run a pretty good outfit and build a pretty good portfolio and flip a decent number of houses just by working with people who are going to bring leads to you, or you going and finding leads for yourself. If you want to ramp it up, then we're going to have to get into the marketing space a little bit, which is A-OK. So one of the things we're going to do that I think is one of the best ways to generate leads, it's been working since the beginning of time, it'll always work, is number one, cold calling. So what we're going to do is we're going to pull a list from an app like Deal Machine or PropStream of these distressed homes and these distressed sellers. You can plug in this different information, and these apps will give you these homeowners and these addresses of people who fit the bill of folks you're trying to find. Maybe they've been in divorce recently, or it's going into probate, or it's pre-foreclosure, or it's foreclosure, whatever list we're pulling. Okay, you pull that list, and then we're going to skip trace that list, which is just a fancy word for we're going to take that list, and then we're going to go find the phone information, the contact information for all those property owners. Then we're going to pick up the phone, whether we do it ourselves or we hire out a company like REI Call Center, and we are going to dial these numbers and ask them if they're interested in selling. And usually if we've got one person dialing a day, hitting 1,000 calls a day, it's going to lead to about 10 appointments per month. We close 1 or 2 of those every month. That's a pretty solid strategy. We can mix in mailers, working with companies like Ballpoint Marketing, to where we put a mailer campaign to where we're hitting these houses and they're seeing our branding over and over and over again. Radio ads, pay-per-click, Facebook ads. You can get into so many different mediums to generate leads as time goes on, but I would encourage you, as you're starting, work on the organic side, have people bring them to you. If you got to get into the paid, good place to start is cold calling and mailers, and then you can kind of expand from there as you start to understand the market and dial in your data. The 5th step is being able to analyze deals. Now, I could sit here and talk through everything you need to analyze a deal, but I would be repeating myself because I just posted a video of me doing an entire analyzation of a property behind the scenes with my students. And so we're going to put it right here, and I want to encourage you, go watch this video when you get done with this one, and it'll break down exactly how I analyze a deal. This is a deal I just analyzed live for my students a couple weeks ago, and it's going to give you all the nuts and bolts of what you should look for and what goes into analyzing a property so that you can make sure you're buying good every single time. Number 6 is we got to be able to make offers, baby. Once we have those deals coming in, we've generated those leads, we've analyzed those deals, we know they are good, then we have to make offers. Look, this is a volume game. It's interesting. I have the opportunity to coach hundreds of people, and they'll come in, I'll work with them, our team works with them, and they'll make like 2 offers and they don't get their offer accepted, and they're frustrated. And it never fails. This happens all the time. And I had to sit down with them and let them know that, look, this is a numbers game. This is a numbers game. Think of the 1-1-1 rule. If we're analyzing one a day, making an offer per week, but that's only leading to 1 deal per quarter, do the math on that. That means we're making, 12 offers to every one that we get accepted? It's just the name of the game. And you're going to get your offer accepted, or you're going to get your offer rejected for a number of reasons. They're not going to like your price. They're going to go with somebody else. They're going to decide to take it off the market. I mean, there's a number of reasons that you're going to get your offer rejected. That's okay. We have to be making offers. I have a rule. Anytime I look at a deal and the number makes sense, I go and I make an offer, and then I figure out the rest after. So what is the rest? Well, if you're like me, you go and you make a lot of offers, you get these deals under contract, and then you're like, holy crap, how am I going to pay for this? And so that's where funding deals becomes really, really important. And when I look at real estate, you got to generate leads, you got to analyze them, and you got to fund them. Those are kind of like the big 3, right? So we're going to pop a video up here on the screen that talks about how I fund my deals so that you can go watch that more in depth after this video. But to give you a sneak peek, one of the main things that I do to fund my deals is on the front end. Okay, when I say the front end, this is on the purchase and the rehab. I will use either a hard money lender, a private money lender, which is just somebody in your network. Hard money lender is a company that lends for short-term at high interest to help you buy the property and rehab it. Private money lender is essentially going to do the same thing, but they're in your network, and it's going to be less expensive to do it. I will use a HELOC, a home equity line of credit, or I'll use my own cash, or I may use a combination of any and all of those, okay? So I will go and I'll buy the property on the front end using one of those methods. If I use hard money, they're going to make me put 10% down. They're going to loan me 90% of the purchase, and they're going to loan me 100% of the rehab. Very easy to get into. Most of the time when I work with a private money lender, they're going to lend me the entire amount. So they're just going to give me everything I need for the purchase and the rehab. Or I may use my HELOC to do it all, or I may use my HELOC for the down payment for the hard money lender. If a private money lender wants a down payment, I can use my HELOC cash. I can buy it all cash or use it as a down payment. And so that's how I usually structure the deals. And so then we will get them rehabbed. All right, and then if we're flipping, we're just going to sell them. We don't have to do anything on the back end. But if we're keeping them as a rental and we're burring, right, buy, rehab, rent, refinance, and repeat, on the refinance part, I'm going to, and I mentioned this earlier, I'm going to refinance into a small local bank using a portfolio or commercial loan, or I'm going to use what they call a DSCR lender, a debt service coverage ratio lender. And those people, DSCR lenders, essentially don't necessarily care that much about your personal finances. They will to a degree, but not near as much, as they are just looking at how that property is going to perform, and they're going to lend to you based on how that property is going to perform. And so without getting in the weeds, when they look at debt coverage, when you look at what debt coverage is, if you have a ratio of 1, okay, which is going to be what the money you have coming in based on your NOI, if you have 1, then that property is going to break even. And so a lot of those debt coverage lenders, they want to see around a 1.1, 1.2. That means you're making a little bit of cash flow, and anything above that is gravy. Now, they will work with you if it's break even. There's even deals that they work with you when it's negative cash flow. But that means usually that you got a strong portfolio, a lot of cash coming in, a lot of income coming in. So anyways, I could teach on funding all day. Go watch this video up here. It'll help you out a ton, but just know that we've got to have that funding in place. That way we can go and execute on these deals as they come across the table. The next is rehab, and we talked about this earlier. We got to find a good contractor team. The best way to do that is through networking. working with agents, talking with other investors, getting on local Facebook groups, going to local meetups, virtually going to faraway meetups if you're buying in a different town, asking property managers, listen, you try hard enough, you work hard enough, you call enough people, you set up enough Zooms, you set up enough phone calls, you go to enough coffee, lunches, breakfast with people, you can build out a team, your entire team, but a team of contractors pretty darn quickly. And I usually recommend having 2 to 3 that you can call so that you can get quotes and get the best rate on each deal. But even if you're only able to get 1 or 2 at the beginning, go with the contractor who's working with investors, who you build a relationship, or property managers or the agent that you're working with. They have a relationship with them. They have good reputations. You're able to get the referrals from them, call the referrals, see what those folks have to say. Because I'll tell you, a contractor can make or break your investing. And so really taking the time to dig into these folks, make sure they have a good reputation, asking others who work with them what their thoughts are, and really just doing a due diligence period will make your life a lot easier. And just quick note here, you don't have to use a GC. I get that question a lot. Do I have to use a general contractor on these deals? No, you don't have to have a general contractor for every rehab you do. I never use a general contractor. The team I work with, they have their builder's license, and that's it. To be honest with you, I've worked with a lot of contractors in the past who didn't even have that. So take it for what it's worth. And then the last thing, we've already talked about this. Step 9, after we've got it fixed up, is we're going to get a tenant in place if we're going to rent it, or we're going to list it on the market and we're going to sell it if we're going to flip it. And when it comes to choosing what the rent should be or what the sales price should be, it's when on the rental side, we talk to property management companies, see what homes of like kind are renting for, so we know where to set our price. Or on the flip side, we set the price based on what the after repair value is by looking at what other homes in the area have sold for recently that have been fixed up. Obviously, we need to know all these things on the front end before we do this on the back end. But once we've been through this entire journey, it's now time to get the tenant in place or flip it for a profit. And both of those are wins, and they feel really good when we get across the finish line. But now we're not done there, because once we get done with that, guess what we got to do? We got to start the process all over again. Or you may have this process going on 2, 3 different properties at a time. But once we get that baby rented out or flipped, it's time to go to the next one. Do not let the foot off the pedal. That's where people get lazy. They have 1, 2, 3 properties and then they stop. Not going to do much for you, especially in the short term. We need to keep going. Scale, 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 scale as fast as you can. Let that compound effect happen over time. Let yourself have 10, 15, 20 properties that are all appreciating in value over time. While tenants are paying down the debt, your cash flow is growing, you're getting tax benefits, and you'll look back 5, 6, 10, 15 years later, and your life will be completely changed. So guys, go implement this ASAP. Go get that next deal. Let me know when you do. I want to hear all about it. Thanks for hanging out with me today. I'll see you next week.